Okay, so what are boundaries? Boundaries. When to say yes, how to say no by Amazon will teach us about relationship boundaries. Um, what does it mean to have boundaries when you set boundaries? You know, I told you that if you take the car in the middle of the night, you're not going to be able to come home anymore. Those are boundaries. What are some other examples? You can come up with a ton of correlations with boundaries. But really what you're looking for when you're trading is a playing field, right? So you have a playing field in sports that you can understand. So a football playing field is, or a basketball field, you know where the boundaries are in that. It's the same thing in trading. You have a trading playing field. And what do I mean by that? Um, we use the same levels to trade to. We use the open, high, low, close. Everybody uses that. And when you get to these levels in trading, price bounces or will react at that level. Some levels hold price, like an open. So if you're trading above a prior open, you just generally want to stay long. If you're trading below a prior open, you generally want to be trading short. Same thing for the prior day close. Often price will take off from a prior day close and turn around and go back and fill it in. See, we have a little gap from Friday that was not filled. Okay, so there's many ways to define the playing field of boundaries. I like my template the best because I've put both the opening range indicator and the LRT lines indicator on the chart with those pivot points and high open, high, low, close with momentum. And I have a complete playing field of where I expect price to move with inside my boundaries for trading. And this is fractal. It works on every time frame, okay? So it'll look the same on a 60-minute chart as it does a 30-minute chart, as it does a 15-minute chart, as a 1-minute chart. These boundary levels are the same. It gets outside the boundary, you can expect it to pull back to the middle or to the opposite band. That's what price does. It has a boundary. So how did I get my boundaries? Well, the main boundary that I came up with on my linear regression lines indicator is very simple. Everybody, has that question that we're all trend followers or this or that. But if you ask them to define what a trend is, they couldn't do it. So here is my true north, my trend that the price always balances to, and you have the standard trend filter that everybody else looks to, which is the EMA 200, right? So I have my trend filter of the LR1 against that EMA 200. And then what I have done is I've created volatility envelopes off of my true north to give me that playing field so that I know, well, for instance, I put 7s as the outer bound level as a standard look, but it really, the default is 9. It goes all the way up to 9 because when you get to the 9, you're pretty much at the top of your game. It's going to turn around. It doesn't stay outside the 9 for very long. I just want those warning tracks on the 7 because usually, before it gets to the 9, it's going to turn at the 7. So I want to see that warning light. But any time frame, 30-minute, 5-minute, 1-minute, this volatility is going to max out by 9. I mean, One time in a blue moon, one time out of 100, you might get it to a 13, but you'd be sitting there waiting for a very long time. And in fact, if you tag a 13, somebody was asking, do you trade these outer levels? Well, yeah, that's why we have the ability now to take trades on these outer bands, right? That's the whole game, is to identify when these opportunities come up so that we can take the maximum, distance off of them. So if you tag a 13, you've done really well. But for the normal trading playing field boundaries, a 7 or a 9. So I took this concept and just blew it out of the water even more with putting it on the time frame that I trade, 7:30 to 10:30. That's the data I want. I'm going inside that time frame. I'm not trading from tip to toe. I'm going inside that time frame, choosing my trades wisely inside my boundaries. First, am I opening out of bounds? What is it doing? It's going to pull back, right? To get to a level where it can take off from. You don't take off from out of bounds, correct? Correctamundo. So right there, your ears should be perking up, right? You're opening out of bounds. It's not going to go higher, guys. I'm telling you, it's got to pull back first. So we have some very secret stuff here, right? If you just put it on your time frame that we trade in the morning, and then look at it, where am I opening? And then my standard deviation, these are ATRs. So my standard deviation of what did this range compared, we want to compare apples to apples. So if I take this same time period and average it out, what would one entire uh, standard deviation be? That would be profit target 3. But what if I wanted to take a smaller chunk out of that? What if I wanted standard deviations 1 and 2? So here I've got them on the chart for my time period. I know exactly how many points. These are points in the equities. It's ticks in the crude. So over this time period, I know that there's a potential for 60 ticks opportunity. This is profit target opportunity, a PTO. I need to put an O on here, PTO1. Just do it right now, right? No better time than the future than in the present. So we'll go in here and rename this PTO, because that's what it is. It is a PTO. Here we go. PTO, big O. That's a big O. PTO 2 and PTO 3. All right, so that's 3 is the full Monty. That's what I could expect if everything were 100%, 100%, 100%. But as we know, nothing about averaging anybody is 100%. You're not going to have all the kids, 14 kids stacked up together who are all 5 feet 6 inches tall. No, you're going to have some 5'5", you're going to have some 5'8", you're going to have a lot 5'9". They're going to be an average. So that's why you don't trade to the full average. You trade to a standard deviation of that average using statistical methods. Statistical probabilities, stacking the edges on your side. So nothing, you're changing the fallacy that trading is just, random variables. No, we're using mathematical statistics to our method. So we're going to be knowing that there's going to be an opportunity to get a PTO of 3675. So you can put it on your ruler and go from the low of that session and say, here is my profit target in the morning. Profit target 1. Profit target 1 was reached. In fact, if you go back through your sessions, you're going to find that every single time profit target 1 is reached. Okay? So our job to get to profit target 1 is to decide, am I going long or short, right? And is price out of bounds going to reverse back in? Where am I in the playing field? Do I have room to get to something? And then I can trade to those other targets. I can trade to that prior high. I can trade to that value area high on a 60-minute chart, or whatever it is that floats your boat. Draw a line, trade to it, but just know that you're within a certain amount of distance that's now mathematically possible for you to put on a trade. So get the LRT lines indicator, put it on your chart, get the mini package. You'll get the market analyzer with these settings in it, and the Bloodhound process for determining higher time frame trend, momentum, and linear regression, and give yourself a chance to start turning the tables on trading and putting yourself inside that playing field so that you're able to maximize what you're doing and minimize your risk, because your risk is right here. We already know that in order to trade anything, we need at least 9 points of risk to put that trade on. Okay, at least that's one ATR. So you probably want to do a 1.5 or something like that, usually a multiple 1.5 or 2. But you know what your 15-minute risk is, and you know what your 5-minute risk is. So reach for the stars. So you're getting your 2-to-1, 3-to-1, and just take your trade off and go home. You never know, like this just turned around and never recovered. Fridays are generally like that. But definitely come to the website, check us out, and we will talk to you soon. Thank you so much.